1010 WOLB Baltimore and WERQ FM HD3 Baltimore.
The views and opinions of the guest and host you hear on 1010 WOLB
are not necessarily those of the staff and management of Radio 1, its sponsors, or advertisers.
Welcome to Pocket Watchers. I'm your host, Treetop Chris. On this show, we talk about nurturing your wealth and cultivating your future through financial education. Let's talk finance, people.
Peace, family. It's your boy Treetop Chris checking in on this Wednesday evening. Hello, Baltimore, and everyone on TikTok. Thank you for joining. Special show for us today. I want to go over something that has it's actually a kind of a tough conversation to have, and I hate to start the show this way, but it's very important that we have the conversation. And that was another thing about what I do. I like to have those conversations that we all kind of know about, but don't really talk about. And today, just overall, it's going to be about life insurance, right? But, you know, I have my own kind of spin. And the reason that I brought this up is mainly because I went to 2 funerals this past month, right? And out of the 2 funerals that I went to, you know, whenever you have a death in the family, for the most part, especially if you're in a family that is either tight knit or loosely connected, you know, a lot of people have their own cliques in their family. They keep people close to them and they take care of those people close to them. Some families are kind of scattered all over the place. But ultimately, when it comes down to the passing of a relative, what happens normally? People are trying to scramble to figure out how they're going to pay for the person's funeral arrangements, anything that they have, bills, etc., after they pass away. And that really bothered me, especially at this point, because now that I know finance and I have so much to offer so many people around us, I want to make sure that we're taking the time to think about, and not only think, but plan for our family members and loved ones going on to a better place, for the people that deserve it. Some of us might not be going there, but we're not going to talk about them. Overall, again, life insurance. Now, how many people you know have went through similar situations where someone passes and they're like, hey, you know, I'm reaching out to you. We need to pay for a funeral. It's $3,000, $5,000, $7,000. The casket costs this many thousands of dollars. Like, it's ridiculous. And you don't really worry about it until it happens for a lot of people. For the people that work a 9 to 5, usually they have something called term life insurance. It's a couple dollars. Doesn't really cost any money, but you feel like you need it, but you don't need it. But you really do need it. You should always have life insurance. But, you know, ultimately, it's a game that the wealthy play with life insurance. But that I have to kind of build up to that, because a lot of people just need the foundation, and that is just making sure that you have something to pay your bills so your family does not come out of pocket in the event of your untimely death. You know, because, I mean, even with me, I mean, I'm doing this show. God forbid something happens to me when I walk out of here, but I'm covered. I just hope that everyone that is listening to me is covered in some way, shape, or form, because you never know what's going to happen. So let's kind of get down to it. And we're going to cover some different kinds of life insurance, but ultimately I'm going to show you how the rich use the life insurance in a totally different way. Their idea of life insurance, to them, they use a concept called infinite banking, but we're going to get to that. Now, the first type of life insurance that I kind of wanted to talk about was term life insurance. Of course, again, this is what your job normally offers. You can get it on your own. And thanks to everyone for joining. You can get it on your own, but you want to have something. And term is just basically means 10, 20, 30 years. If you're the policy holder, you know, you want to have this amount of time. It's very affordable. The other options of life insurance that you need in the event that something happens are a lot more expensive. But the thing about term life insurance that people don't really know too much about is the fact that it costs more the older you get. OK, so if you're young now and term life insurance is really cheap, that's great. But the moment you get past 65, 55, 65 and up, they're going to start raising that bill on you. And that's really because they know that it's almost time to pay out. So when you're thinking about life insurance, think about the most bare bones. I just have something that's going to cover that 10, 15,000 if something happened to me, because something is going to happen. We expire like the food that we eat, the plants and the trees. This is Treetop Financial Group, Treetop Finance. That's the name of my band, my company. But all things around us that are blessed by the Most High, they come to an end. So at the bare minimum, I want you all to either have term life insurance or one of the other options that I'm going to explain to you today. But to keep it very, very simple, again, term life insurance is the bare minimum. It's like you're walking outside. You got the clothes that you need on. They might not keep you warm. They might not keep you cool, but you got some clothes on, so you're okay, right? Term life insurance. I want y'all to have it if you don't have it. Because I don't know if you know how much it costs to have a funeral, but it costs money. Now, this is suitable for people who have low income, or, you're just not concerned about turning your life insurance into an investment vehicle. That's actually bad in a sense when I get to the other types of life insurance. But if you're only worried about having something, have at least term life insurance, family. At least. Okay. Now, whole life insurance. Have you heard of that? We got a lot of people that come in and they try to sell us whole life insurance. We're talking finance right now, right? They try to sell you this laundry list of stuff like, hey, you can get money this way and etc. If you have whole life insurance, your job has term life insurance. There's people out here that try to sell you whole life insurance, and they try to make it for where as though you're not paying as much as you should, so that they can make money on their own. Now, me personally, I'm the type of person that says, okay, if you want to get some money from me, I want to know how you make your money first. And I'm very transparent with the people that I work with. I let them know exactly what I'm going to do, how much money I'm going to make, how much money I'm going to make them in the process. But a lot of these insurance companies and insurance people that you work with, they won't explain everything other than the bright side. The grass is greener on the other side type of situation, right? But to further go into whole life insurance, I mean, it's just, I guess it would say, how can I explain? You have guaranteed premiums. It's a permanent life insurance policy, right? With term, you can kind of cut that off. You can stop term life insurance whenever you want to. Well, whole life insurance, the whole plan is for you to be paying the same amount for the rest of your life. Hopefully, that's the plan. Make sure that you're covered. But remember, with term, as you get older, it expands, it becomes more. You have to pay more. With whole life insurance, you set it. You don't forget it because you got to pay it. But you might have the ability to do something called cash value accumulation. Basically, what that means is you can have a premium, meaning that this is what we're going to cover if you pass away. And then they have a cash value amount that you can take loans against. What? Life insurance, you can take loans against your life insurance. I said, this is here for me when I die. Why? Well, how can I take loans against it? See, that's part of the infinite banking system that I want to explain to you guys and gals over time and in this show today. But remember, term life, it gets more expensive as you get older. Whole life, it's supposed to stay the same amount for the entire time that you're using the life insurance, lifetime coverage, right? Now, I'm going to get into why whole life insurance is great for you when it comes to the infinite banking system, but I got something better for you, right? And the infinite banking system is crazy, but you got to stay to the end of the show to catch what infinite banking is. Just know that you can create your own bank. And you've heard the phrase that people say all the time, create your own bank. You want to do this, you want to do that. I'm going to explain why and how in this show. Now, we got whole life insurance. We got term life insurance for the people that just joined. That's what we covered. Remember, I always post my last show on YouTube following the show the following week. I think we are on week 11 at this point in the show. I think online we're at week 8. So probably a week or two behind if you want to catch up on the show to figure out or hear any type of points that I give you as free information. Of course, if you need anything further, you can always reach out to me directly. If you're on TikTok and you're watching this, you know how to get to me. Just drop a comment, shoot me a message. But if you want to call me directly, my number is 1-866-334-8359 for the people who are interested. My website is www.treetopfg.com. It'll allow you to reach out and set up a 30-minute talk with me, and it's totally free, just in case you have any questions about what we're talking about today. But to keep going forward, we covered term and we covered whole life insurance. And there's also something called universal life insurance, right? Universal life insurance is just, they give you more flexibility because you got whole life insurance. You kind of set it, and that's what it is for your whole life. Very, very simple. It can get complicated, but it's for your whole life. Universal life insurance, you can change your premium. You can change how much you're paying throughout the time frame. This is good for people who say you have some coverage and you want to have more coverage because you're starting to make more money. Like, say if you're covered for $20,000. Most people are covered for at least $100,000, but some people are just covered for $20,000. Remember that funeral is going to cost your family $5,000 to $15,000. Remember, that casket is expensive, y'all. For the people that just joined, we talking about making sure that our people are good when we take off to the next level, when we go off into the universe as a spirit and fly away. But anyway, universal life insurance, remember, it's just like whole life insurance, except you can change your premiums, how much you pay a month. It's still life insurance and it's whole life coverage. It's not like term. It's not going to change and become more expensive the older you get. Remember, stay away from term unless you don't mind paying at least, or you want to pay the least amount your entire life. You want to get term life insurance if you don't want to pay a lot and you're not interested in infinite banking or cash value or any of that stuff, right? So we got whole life insurance, we got term life insurance, and we have universal life insurance, right? These are some phrases that I want y'all to take the time and look up. Like, don't just hear me flip off the screen, go somewhere else, and then don't use the information. Go look into it. It's not all about making money. It's not all about being cute or having everything. You got to make sure that you're set when you go. You can get it all in life. You can't take it with you, right? But you don't want to leave people with a bill when you take off, right? Okay. Very, very important. We're talking life insurance coverage, y'all. It's Treetop Chris here. Again, we're reporting from Baltimore live. Again, everybody on TikTok, thank you for joining. I appreciate your presence here. Welcome, welcome, family. Indexed universal life insurance. This is what I have. Indexed universal life insurance. What does that mean? Now, we talked about universal, meaning that you can change your premium over time, right? You can change how much you pay monthly. It's not going to go up on you when you get old and you start going to the doctors, your knee hurt, your arm hurt, you got chest pains, everything that's happening to you, or you got people that's going and they might end up in a bad place like hospice or something like that. And then they're trying to scramble to trying to figure out how much coverage they have. You don't want to be one of those people, right? You want to have everything set and you ride off into the sunset. Hopefully, it ends very well for you. It doesn't work for everyone that way. Sometimes we get out of there a little bit sooner than others. But anyway, indexed universal life insurance. It's the same as universal life insurance, meaning you could change your premium. It's for your whole life. But indexing means that it's hedged against the stock market. What? Oh, you didn't know that they trade life insurance on the stock market? They actually do. Every single life insurance company and policy that people create is traded on the stock market. So it's not just about you paying off your death and making sure that you got a nice casket and a tombstone or you wherever you at and whatever you decide to do. It's not just about that. Everything is a business, y'all. In another episode, I'm going to tell y'all how they trade people on the stock market through bonds. And we ain't going to talk about that right now. For my people that's not on the street right now, they doing a little time. You are definitely a bond. Remember, I got to go to get my bond number. But hey, just dropping some hints in there because we got more shows to do. I don't want to give you too much information, but back to index universal life insurance. Now we have a life insurance policy where I'm putting money in. They're taking my money and they're hedging it in the stock market. Now, whole life insurance and universal life insurance have their differentiations, right? But the good thing about index universal life insurance and it being in the stock market, I can't take less than a 0% loss. Okay. If I was to hedge my whole life insurance against the stock market, if the stock market goes down, I could take a loss in the amount of money that I have sitting in my whole life insurance cash value amount. You hear what I'm saying, people? on a whole life insurance policy, if the stock market goes down, you're talking about the S&P 500, because that's what they usually hedge your cash value against, then you'll take a loss. With index universal life insurance, you do not take those losses. Again, universal life insurance and whole life insurance are for your whole life. If you have a job right now and you have term life insurance, but you're interested in investing in the safest way, one of the safest way possible, I always suggest people think about infinite banking and going into index universal life insurances. And it's very, very important that you look into it, right? Don't just listen to what I say and hope, say you want to join. What, Anthony, you can't join my live, bro. You can't join. Every single week we go through this. You can't join my live, dude. I appreciate you. If you can, if you got something to say, just drop a comment. I'll try to read out what your comment is. But especially if you have a question, just drop it in the comment box and I'll try to get to it, because the show is pretty short. But anyway, index universal life insurance, my favorite one, and that's what I have, right? But if you want to compare them, you want guaranteed cash growth, I always say index universal life insurance. Again, if stock market goes down, you have whole life insurance, you have money into it, then you lose your funds. Index universal life insurance, 0%. Now, there's also a guaranteed return on your life insurance, right? 4%. 4% guaranteed on your money, right? Now, remember, whole life, even though you have that 4%, if the stock market goes down and your index, you'll lose some funds. But if you don't index your money, if you don't index it and put it against the stock market, you'll always make 4% on the money that you put in your insurance policy. What? You'll always make 4% on the money that you put in your insurance policy. Very, very strange. I thought that life insurance was there to pay for things when we die. It is. But the wealthy have did something very, very, very slick with it. They created a concept called infinite banking. What is infinite banking? Well, remember, we talked about having premiums and creating cash value in our life insurance policy. But how? How do we do it, right? When you get with someone to set up your life insurance policy, they usually call them term writers. When you get it with a term writer, they're going to ask you a few questions. They're going to ask you questions to see what kind of money they can make from you, or are you the type of person that are investing with them? And it's very, very important that you ask them or you talk to them about cash value life insurance, because you need money. You're trying to invest and make sure that your family is safe. Now, I can't say exactly how much I'm worth if they take me out, because I don't want nobody to know. But if someone was to take out someone that I know that's on this index universal life insurance infinite banking system, they might get $800,000, $1 million. Now we talking about generational wealth. You got one person who got term life insurance, they die, they get $100,000. I'll give you a statistic as well. In the first generation, 70% of your family's wealth is lost. 70%. In the second generation, 90% of your wealth is lost. Think about that for a second. In the first generation, 70% of the money that you saved, that you worked up and you gave to your kids, say you got a couple houses, you got some money in the bank, you did pretty well for yourself. 70% of the time that is gone. Statistically, this is everybody. This is not just some random people. This is everybody, right? Second generation, when their kids get the chance to have the money, 90% of their wealth is gone. And this has happened to some of the richest families in history. This is why the infinite banking system and whole life insurance, index universal life insurance is so important. Let me give you a concept really quickly. If you had a family of, I say 3, it's you, your wife or your husband, and you have a child. Doesn't matter how you had the child, you just got a kid. That kid is supposed to get everything that you have, right? When you pass away. Hopefully you give them something. Hopefully you don't stick them with a bill. But if they got everything you got, would they have a lot or a little? That's the first thing I want you to think about. Would your kids have a lot or a little if you passed away? Because some people don't even have kids. You have to identify a beneficiary when you're talking about life insurance. So who's going to get your stuff? Very important. Who's going to get your stuff? Not just who's going to pay the bill when it's time for you to kick the bucket. I don't say kick the bucket. That sounds crazy, but who's going to get your stuff? Okay. Now, you figured out who's going to get your stuff. Next thing you need to figure out, how are they going to maintain everything that you have so that the next generation after them will be okay as well? This is where the infinite banking concept comes into play. What these wealthy families do, they put a policy on their kids when their kids are born, and they make sure that their kids are worth a certain amount of money when they pass away, right? When they get old enough, they'll put money in their own life insurance policy. But the trick is to make sure that every single generation has a life insurance policy. Now, who does the life insurance policy pay? You would think that it would pay the kid or the kid's kid. No, it's not what the wealthy do. They create a trust. And when they pass away, the money goes to the trust. And guess what the trust does? The trust depicts exactly how the kids or anyone else can spend the money. So if I have a life insurance policy on me and it's worth $500,000, when I pass away, it goes into the family trust, right? The family trust says that you have to go to college, or you can't sell the house that's worth $300,000 until you complete college, or you have to have a job for 2 or 3 years in order for you to get the house. These are the type of things that you can put in the trust as guidelines to make sure that the money is not diminished over the generations. Because remember, first generation, you lose 70%. Second generation, you lose 90%. That's only because there's no structure, right? Think about the years after. You're not working hard just to have everything for yourself. You're working hard so that someone can benefit from it. At least I would think. Some of us, not saying that you're selfish. If you don't care about what happens after you go, by all means, live your life, baby. Live your life. I'm not judging you. But for the people that are working hard, for the people after them, I want you to think about how the money is going to be dispersed if you put your hard years in to make sure that you create something for yourself and your family. Now, back to what the rich do. Think about this. When they pass, their money goes into the trust. The kids they can be a certain age before they access the money. When we're not talking about wills, because wills, you have a will for someone, you write a will. XYZ gets this watch. XYZ gets these shoes. XYZ gets this jewelry. Whatever that is. Get the house, get the money, whatever. That's a will. But the will has to go through something called probate, meaning that the state goes in between you and your family and they say, I need a piece. I need several pieces. Give me several pieces of what you have, and then I'll give your family what they're supposed to get. Probate. Now, that's if you have a will. But if you have a trust, the trustees handle everything and you don't have to pay the state. Now, if you use what I use, which is index universal life insurance in the process, and you have a trust in place, now I'm worth a certain amount of money. The money doesn't go through the state. They don't run my pockets and take my bread. The trustee handles it and they say, okay, Chris passed away, y'all. Chris said that in order for you to get access to such and such funds, you need to do X, Y, Z. And then you can only access a certain amount of the funds as long as you have X, Y, Z. These are the type of statistics or parameters that you can use to set that up. Now, you have everything in place, right? Every single time someone dies in your family after you, that money goes back into the trust. Now, say if they don't pay. With life insurance, they have premiums and they have cash value. See, me, I like to front load my life insurance, put a lot of cash into it because I like to take loans against my life insurance. Okay. Now, if you're the type of person that don't pay it back after some years, the premiums that you have will pay for the remaining amount. So say you stop paying when you're like 40, 50 years old, right? But you have a premium that is worth, let's say, 500 grand. We still using 500 grand. If you stop paying it, the premium will pay itself until you die. And then whatever the remainder is will get paid out to your beneficiary. Let me say that again. If you set up index universal life insurance, whole life insurance, and you do it correctly, when you pass away, this is what the really, really wealthy people do. They get old and they stop paying on purpose because they can take loans against their life insurance. Now think about this for a second. If you have $500,000 left in your life insurance and it costs you $70,000, $80,000 to live a year, well, you know you got a couple years left of not paying anything because you got 500 grand in the life insurance. Whatever's left is going to cover your bill. I've seen it done. I watch it happen. All you got to look up is infinite banking. Infinite banking. If you look up the concept, they'll explain it to you. Nelson Nash. He'll explain it to you. Take all your money. Every time you get paid, this is what they do. It's so crazy. They'll take their amount of money that they get paid, all of it in a month, and they'll put it directly into the cash value of their life insurance, right? Then they take the loan against their life insurance to pay their monthly expenses. Why are they doing that? Early in the show, I said you guarantee 4% growth on your money. This is where the infinite part comes into play. Now, I index as well, meaning that my money goes against the stock market. So sometimes I might get 12% return on my money. So think about that. If every dollar that you make, you put it into cash value life insurance, you take a loan out, they're going to charge you for the loan. I'm going to tell you how much they charge me. They charge me 5% on average, right? Depending on which company you're with. You know, you can look into it or you can call me and figure out what's the best companies to go with. But if I take a loan out at 5% and my money is being made at 12%, I make the difference. My money always grows and I just take the loans and I pay it back. My money always grows. Then when I die, my kids get a part of it. I'm running out of time, y'all. We getting into the heat, right? But again, put the money in, the money continues to grow. When I pass, it goes to the trust. The trust pays the kids out based on certain parameters. They keep doing it over and over again. Before you know it, your family trust is worth millions because every time someone dies, they have what they need in place to make the money grow. Now, I cover this in more detail at a later time, but we're running out of time. Again, I want to thank everybody for joining. Today, we talked about life insurance. We talked about briefly infinite banking, but you got to catch me next week on Wednesday. We're going to be changing our time soon. It's your boy Treetop Chris checking in. Peace and love. You were just